Good morning, everyone, and welcome to NYSE Live. I'm Kristen Scholler here in studio at the Stock Exchange. We see equities remaining volatile. They are down fractionally this morning as the conflict in Iran continues and oil prices stay elevated. In fact, ICE Brent crude oil is trading at about $98 a barrel as we come on the air at 9 a.m. Eastern. The International Energy Agency on Wednesday did agree to release 400 million barrels of oil to help supply disruptions. Energy Secretary Chris Wright said that the U.S. will release 172 million barrels from the Strategic Petroleum Reserve. Well, UK-based fintech Revolut just announced that it acquired a full UK banking license after starting that application process in 2021. The fintech, which reached a $75 billion valuation last year, can now offer accounts as a fully licensed bank for business and retail customers. Its co-founder and CEO said in a statement, quote, "We look forward to introducing a full suite of banking services to our millions of UK customers," end quote. And Revolut says accounts will begin rolling out this week. Well, here's what's on tap this hour. As America gears up for its 250th birthday, McKinsey Global Institute is shining a light on America's competitiveness and resilience in a new report. One of its executives will join me to share more. And Firebirds is a wood-fired grill chain with 69 locations across the country. Ashley Mastronardi recently caught up with its CEO at the ICR conference in Orlando. You'll hear what he had to say about the recent interest in protein-centric meals. Then at 9:30 a.m. Eastern, we'll take you live to the opening bell, as we always do, as MDA Space is set to open equity markets here on tap to celebrate its listing on the New York Stock Exchange. Its CEO later this hour is going to join me to talk more about how it plans to allocate this fresh capital and more. Let's start with the markets, as we always do here on NYSE Live. A lot, of course, moving and shaking this morning, and still a headline-driven market. So a lot to talk about. And joining me now with more is Stephanie Roth. She's the chief economist at Wolfe Research. Stephanie, welcome.
Thank you.
Great to have you here on the show this morning. Oil seems to be the main story, of course, with ICE Brent crude hovering around $98 a barrel. How do these developments in the Middle East impact prices at home?
Yeah, this is going to become an issue because you're going to see food and energy prices start to rise. And by the way, both food and energy, because food is exposed to the fertilizer disruptions that are also playing out with its strait. So our expectation is you'll see core inflation pick up a little bit, but really the conversation is around headline. Headline inflation could easily be boosted by, call it 40 basis points over the next number of months, which could be a real challenge, especially for the lower end consumer who are already constrained.
Yeah. We are going to get the Fed's preferred inflation gauge tomorrow, the Personal Consumption Expenditures Index, so it will not include the recent volatility and certainly the surge that we've seen in these oil prices. How is that going to inform this data, the Fed, when it meets next week on rates?
I think it will be seen as to some extent old news, and what we'll see is that inflation is still a little bit elevated in Q1 here, and the CPI print, the readout from the CPI print yesterday, and now this is a February print, it actually suggests that core PCE was potentially above 0.4% in February. So they're heading into this meeting with a string of a couple of prints that are a little bit elevated, on top of the expectation that you'll see elevated inflation prints into the future driven by food and energy. So they're going to just signal that they're waiting and seeing. This is the sort of the right move at this point. The question is to what extent they can look through the energy shock, or if they need to sort of shift a slightly less accommodative stance. The market is still pricing in, 1.5 cuts. The question is, are they going to try to confirm that or not? My best guess is they're going to very much kind of adopt a wait-and-see attitude and let markets do their thing. They want to kind of see some more data before they want to signal the direction of travel.
What are the implications of the energy shock? Could we see that broaden out beyond just oil prices?
So the question really is, are we similar to 2022? And I don't think so, because that was a period of time where you saw energy prices on top of an inflationary shock that led to a really big global reflation. Now, this time is probably different in the sense that the economy is a lot less strong. If you think about the unemployment rate compared to then versus today, back then it was 3.7 heading to 3.5. This time it is 4.4 and kind of pushed a little bit higher given AI. The hiring backdrop was a lot stronger back then. So realistically, and what Fed models typically do is show that energy shocks tend to ultimately reduce demand in the future. So they tend to be, inflationary in the near term, disinflationary in the medium term, and I think this energy shock will be similar.
Could you see it, though, spread out to other commodities that might be impacted in the wake of this?
Yeah, I mean, certainly food prices could be a big issue. About 30% of fertilizers travel through the strait, so this could be a real problem from that perspective. On top of that, you're starting to see some issues within metals. Aluminum is a big one. So you might see, it branch out into other commodities. I don't think it's going to impact, the broad core bucket. But certainly there are other pieces of the puzzle. Airline fares is another big one, given jet fuel.
What's your expectation for Fed cuts this year?
So we're expecting 2 cuts this year, September and December. It's going to be really difficult for Boris to get cuts done in his first meeting or so. Beyond that, we think that the economy will be slowing enough and inflation will be cooling sufficiently so that they can get the cuts done, but it's not an easy call. So I would say it's close to 50-50 on the 2 cuts, but we're still officially calling for 2 cuts.
We talked so much about the implications on gas prices, inflation, what that means for Fed rate cuts, but how does this factor into overall GDP growth?
Yeah, so if you shock the Fed's models, for example, on a, say, $20 oil price shock, they'll tell you it's about a 10 or so basis point hit to GDP, which I think is probably right. Of course, as prices, rise further than that, of course, the shock becomes larger. But it's not that big here. It's much bigger in places like Europe, where they're a lot more sensitive to that, and also they're a lot more exposed via natural gas.
Interesting. So what else is on your radar as an economist right now?
So we're certainly focusing on AI, even though AI has not been the topic du jour. But our sense is that it won't be as disruptive for the labor market as many fear. It will probably take longer for AI to be truly disruptive in terms of layoffs and seeing that type of shakeup. So our expectation is you'll see that be more of an issue in 2027. This year, our expectation is you'll see a low fire environment similar to last year. But even perhaps you might see some sort of better trends, because cyclically you should see a bit of an improvement. Last year you had all the tariff shock. That was a big headwind on growth. This year you should see that improve a bit. So AI should be sort of in the background, but we don't think it's going to be as disruptive as some fear.
I'm glad that you brought up AI. Of course, we had NYSE listed Oracle report results earlier this week that did seem to benefit the AI trade, at least from an equity standpoint. Of course, the AI trade, software stocks, those have been in focus a lot recently. But as it relates to what's ahead on top of AI, it does seem like some of these cyclical sectors have started to benefit this year as this has broadened out. Do you think that can last as we see what's playing out in the Middle East?
Yeah, I think it can. And some of the cyclical sectors actually benefit from higher oil prices. It kind of depends what we're talking about. But the ISM manufacturing PMI started to tick up a little bit. I think those trends may continue. You might just start to see the cyclical economy thaw out after a year where things were really slowed down because everybody was concerned about tariffs and the knock-on effects. And what we learned is tariffs are actually a lot less disruptive for the economy than many thought. So realistically, we'll probably see a bit of an improvement, certainly on the CapEx side. And the one thing we didn't talk about is one big beautiful bill boosting the consumer. We actually just published a note this morning talking about the net effect of one big beautiful bill stimulus on the consumer versus the headwind on gasoline. And generally speaking, most consumers should still be net benefiting from the combination of these two outside of the very lowest income groups.
Okay, interesting. Stephanie Roth, she's a chief economist at Wolfe Research. Of course, thank you, Stephanie, for joining us here at the New York Stock Exchange.
Thanks for having me.
All right, everyone, will stay with us because up next, an executive from McKinsey Global Institute is going to join us to highlight a report that details America's resilience and competitiveness as it approaches its 250th birthday on July 4th. Stay with us.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. As America gears up for its 250th birthday, McKinsey Global Institute is shining a light on the country's competitive edge and resilience in a new report. Joining me now with more is Olivia White. She's Senior Partner and Director at McKinsey Global Institute. Olivia, welcome.
Thank you. It's great to be here.
Yes, great to have you. What are your takeaways from this report?
It was really striking. So America is very competitive right now in the world. Really, I think it's fair to say the most competitive economy. We have been for a very long time. For example, our GDP has been the biggest in the world since about 1860. And there are a bunch of very striking ways in which that has happened over time. And it's happened through a series of reinventions. And those reinventions tell us something about today, where the world is changing. And we as a country have some areas where we've been historically leaders that are becoming more liabilities. And so it's time for another invention or reinvention, and we have some thoughts about how that can be done.
I want to hear about those thoughts. What are your prescriptions for the path forward?
Well, we focus particularly on 5 of them. And the first is building an AI fluent workforce, but also educating people and developing AI and technology in a way so that we push ourselves forward, but also every American has their skills and their mind prepared for a world that in many ways may be different. There's a lot of opportunity, but there's work to be done. The second is infrastructure. We have a real debt in infrastructure right now, and we estimate that it will take about $3.1 trillion to get to where we need to be and be world leading. Relatedly, energy. So technology and AI particularly will demand much more energy, and we need to make sure that's ready to go. Fiscal situation. The debt is as big as it's ever been. In 2024, debt repayments became bigger than the amount of money we spend on defense. There's a set of things we need to do to make sure that America remains, sitting here, the place where people want to put their money to invest, to power all of the AI and the progress that we'd like to have. And then the final is national economic security. How do we make sure that we can produce the things that we need most in order to secure our economic future, independent of what else is going on in the world? So it's a prescription of a set of things one needs to do for optimism, but also to ensure resilience.
And you mentioned in that last point there, of course, basically ignoring or able to operate on its own, right, without any sort of shocks that would be happening around the world. How does what we see playing out in the Middle East impact your view, if at all?
I think it's just a reinforcement of the necessity of having resilience. And resilience can be over time, and resilience often has to be in the near term. And we're seeing today what the resilience in the near term needs to look like in a particular domain. So, for example, we look and we say, of everything the U.S. imports, how much of it is in some form dependent, where there's a dependency we need to think about? We find that about 60% of U.S. imports have an important dependency, ranging from being critical, think chips or smartphones, to concentrated, we buy it from only a few places, to coming from a geopolitically distant partner. So about 2/3, and about 160 billion of U.S. imports are all 3 of those things. So when you think, okay, well, what is resilience going to take over the long term? Thinking really about that bullseye of about 160 billion matters most.
Yeah. And some would say that in order to win here, you have to focus on your strengths, right? What would you discern as America's biggest strengths?
Yeah, this was really striking. We've got these strengths, and they're strengths that have manifested over the full 250 years. So one of them is innovation. If you look at the world as we measured it, top 100 inventions since 1776, 76 of those had an American that was in the lead or participated. And that invention and that ability to innovate has been a real hallmark of our success. A second is our resources. It's a country of real natural bounty. Let me give you just one example. We have had throughout our history 2 times the land per person, arable land per person, as anywhere else in the world. All this has been underpinned actually by infrastructure, so we need to look at that, but also our flexible institutions and their ability to support the reinvention. So and the reinvention. So those are the strengths, and we better lean on them.
Let's focus on infrastructure for a moment here.
Sure.
I know you mentioned that it is absolutely key to ensure competitiveness and resiliency going forward. What about infrastructure needs to change?
Multiple parts of infrastructure. We need to think about our ports, we need to think about our roads, we need to think about the cybersecurity that underpins it all. We were given something like a C in our rating of our infrastructure. Here are just a couple of examples. If you look at U.S. bridges, 45% of them are more than 50 years old. Our ports, none of the U.S. ports is in the top 50 in the world. So there are a set of things that we're going to need to make sure we really spend money on. Now, one thing that's interesting here is permitting has been a real block. So when you go and you look, you realize that there's a real backlog of projects that could move infrastructure forward, but for the fact that permitting hasn't yet been issued.
Interesting. Any risks that you would identify in just about 30 seconds?
I like to think about the risks as manifesting in the way that we're looking forward. So we've talked about some of the debts linked to infrastructure or energy. We need to make sure that we take AI and we use it to strengthen everybody. And we need to ensure that throughout all of this, we've got the resilience in our national economic security.
All right, very good overview. Olivia White, she's a senior partner and director of McKinsey Global Institute. Olivia, thank you.
Pleasure to talk.
Yeah, great to have you. All right, everyone, well, stay with us because up next, the NYSE was at the ICR Consumer Conference earlier this year, where we caught up with the CEO of Firebird's Wood-Fired Grill, an American restaurant chain with nearly 70 locations. Stay with us to find out more about what he had to say.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Steak and seafood is on the menu at Firebird's, a wood-fired grill chain with 69 locations across the country. Ashley Mascanardi recently caught up with its CEO, Steve Kislow, at the ICR conference in Orlando and found out why customers are ordering up these protein-centric meals more than ever.
So Firebird's is a polished American grill. As you said, 69 locations, 22, soon to be 23 states. We operate in a space that allows you to get a more elevated experience than the usual suspects in casual dining, but yet, as far as a price point goes, it's just a couple dollars more or the same as the casual dining price point, but it's a fraction of what people pay in fine dining. Really, the point of differentiation for us is that wood-fired grill, as you said, and it really imparts. If you think about like the smell and the aroma of a campfire. It really, it inspires emotions and it invokes your senses, and just like, I think it really almost begins in the parking lot when you get out of your car and you can smell that wood-fired grill, and then you come into the restaurant and see all those beautiful wood-fired meats and seafood, and it's a pretty special experience for sure.
What is people's reaction to the wood firing preparation, and how does it differ from a traditional grill?
Yeah, that's a great question. I think about like the primitive form of cooking that cavemen and women had, thousands of years ago. It imparts this flavor profile that you really can't duplicate, and it's incredibly craveable. And all those different meats too, they just kind of soak up that really wonderful flavor and the char, from what that wood-fired grill does for the food. So it's definitely experiential. All of our kitchens are open, so you can see the wood-fired grill too. It kind of becomes part of a show. And then our bar is a big part of the product too. Not only are we seasonally doing cocktails with this really special cocktail culture that we have, but we impart parts of that fire too. So it's not just fresh juices, it's charred fresh juices. It's taking herbs and sort of, fire kissing those as well, so that these cocktails kind of take on part of who we are.
The restaurant's been on the scene for more than 20 years. What do you think keeps customers coming back? And do you have a loyal customer base?
We do. It's called, our fanatics they're called the inner circle. And there's 2.5 million people, with over half of those being highly engaged. And I definitely think they keep coming back because, again, it's polished. People are spending their money. They just want a little bit better. And that's where the value proposition lies. You can get a more elevated experience, really great, wonderful, fresh ingredients and menu items. So I think people come back because of the consistency and what we've done for 25 years. And we've got a really successful track record along the way.
With the protein craze and the interest in protein in the past few years, have you seen any growth since your meals are protein centric with a lot of meats and fishes?
Yeah, for sure. I think that center plate protein is what people are looking for. There's a health halo there because people again, when you cook over that wood-fired grill, you really get that the health halo that's involved in that. And also the price point is really a value as well, because people see at the grocery store what's happened with protein, specifically in the beef basket. They know they can come to Firebirds and get a steak for almost what they're going to pay for it in the grocery store. So we're definitely winning in that space. I guess sometimes it's better to be lucky than good. That's the space that we've played in for a really long time. And I think people are definitely coming back as it relates to the protein basket.
And with the new upside down food pyramid and the government is putting an emphasis on protein, tell me about where you're located, in the country.
Yeah, so 69 locations, 22 states. We're headquartered in Charlotte, North Carolina, so that's where we started, and there's definitely a good base of restaurants in the Southeast, but we also are through the Mid-Atlantic as well. We're as far south as South Florida, as far north as Ohio, Pennsylvania. We've got a handful of restaurants peppered throughout the Midwest, and we have a pretty good concentration out in Arizona as well, in the Phoenix market. So, the beauty of that is that, the 22 states that we're in now, some of them only have 1, 2, or 3 restaurants. So really our growth strategy is kind of a grow where where we've already having proven success in some of those states. We're able to go in there and just open 1 or 2 more locations in those markets where we've already mitigated some of that risk.
What has customer feedback been about the food?
Oh, they love it. Again, it's so craveable to cook on a wood-fired grill. That's definitely part of our point of differentiation. I think the other thing that's important too from our consumers that we're hearing is that families really love the Firebirds experience. When you think about polished or fine dining as a category, you don't think about a place where you would take young children and your family. We are different in that respect, and it's really unique that, first of all, we have a award-winning kid menu. We have a junior chef program where the kids are on sort of a journey. They'll get a chef coat during their experience, then they may come back a few months later. We know they're coming back for their second experience, and the second time maybe they get their chef hat. And so they're really being part, and we're teaching them about values. We're also teaching them about health and wellness and sort of the cooking process and ingredients and how important that is. So I think that part's been a pretty special part of what we do. And then, Alex's Lemonade Stand Foundation is our charity partner. So it's childhood cancer. We're looking to find a cure 1 cup at a time. We sell lemonade. It's a big part of the story as it relates with families as well. And they engage with that. And it definitely resonates that that's something that's so important to our culture.
Do you think it's important to expose young children to cooking at that age?
Oh, absolutely. and good choices, right? I mean, it's part of our Kids Live Well menu program that we have, allows them to make choices where it's not just chicken fingers, grilled cheese, or macaroni and cheese. I mean, kids are eating salmon, they're eating steak, they're eating, they're making choices with broccoli, and our menu is set up to be able to allow them to make some of those good choices as well. So I definitely think nutrition is an important thing that we're teaching children today.
And how are you able to scale and also keep things at a reasonable, fair price point? I know a steak you said is about $30. How are you able to grow and scale at the level that you have and also maintain consistency and affordability?
Yeah, I think the evolution of the brand is one of the things that we're most proud of. And I think evolution is the important word, not revolution. So the change happens over time, and the change in food, the change in bar, and the change in price point. But it's not something that you can go get greedy and take significant price. You've got to just take a little bit at a time just to keep up with CPI.
Thanks again to Steve Kislow and Ashley Masternardi for that interview. Well, stay with us because when we come back, MDA Space is set to ring the opening bell to celebrate its IPO.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. Founded in 1969, Canada-based MDA Space develops and manufactures advanced technology and services for the global space industry. The company operates more than 500,000 square feet of design, manufacturing, and testing facilities. It says it's built around three core business pillars. That's satellite systems, robotics, and space operations, and geointelligence. Well, you're taking a live look at that opening bell podium as MDA Space is set to open equity markets. Its CEO is going to join me on the floor for an interview later. You're taking a live look there at MDA Space set for its trading debut here at the New York Stock Exchange today. Once it opens, you can find it trading under the ticker symbol MDA here after its U.S. IPO. Well, the stock market is officially open for trade. We do see that equities remain lower, of course, as the conflict in the Middle East continues. Oil prices are rising. Joining me now with more is Patrick Mueller. He's president of Bella Advisors. Patrick, welcome. It's good to have you on the show this morning. What is your take on where we stand in equity markets right now?
Right now, with the equity markets, we are just really overvalued in tech right now. You had last year, the S&P 500, even though it finished up around 17%, you had 40% of the S&P that was a negative. And the top 10 companies equating for 40% of the growth of the S&P. So the S&P right now is really more like a tech fund. So I would just tell people to be cautious of that and make sure they're a little bit more diversified than being overweighted in tech right now.
We see Brent crude oil, ICE Brent crude oil, I should say, right below $100 a barrel at $99.95 as this equity market opens here today. What impact does that have?
It's going to have a huge impact on inflation in the future, because that's just going to raise the cost of everything when everything's being transported for goods and services around the world. We're going to start seeing inflation creeping back up again because of those higher prices, and it's definitely going to start hurting consumers' pockets because they won't have as much to spend if they're spending at the gas pump. So as we see things escalating and we see these crude oil prices coming up, I mean, hopefully that will be temporarily. But we're definitely going to be seeing some price inflation from that.
Yeah, we'll be watching that closely as well. Of course, we do get an inflation read tomorrow, the Personal Consumption Expenditures Index. It is the Fed's preferred inflation gauge before it meets next week on rates. However, this data we know will not include some of the rising oil prices that we've seen during this month of March. What do you anticipate from the Fed, and how does that report on Friday factor in?
Well, I think the Fed has been pretty cautious for the last year or so. They've been pretty adamant about when they were going to be cutting rates and sticking to that. And they said they could anticipate one more rate cut this year, and they're going to be easing off. So I would expect that when they're going to do that, I would bet that it would probably closer to summer to later in the year before they start making any rate cuts. And I think they're just paying attention to, especially with what's happening in the Middle East right now and Venezuela and all these different things that we're getting into around the world, then it's going to be, if it were me, right, I would be cautious on making any rate moves.
Yeah. You know, it's interesting. Several economists pricing in about 2 rate cuts this year. Of course, we'll see how the scenario plays out. But the last time that we had seen gas prices rise like this was in that 2022 timeframe, and that did have an impact on equities. Do you think this time is different?
I don't know necessarily if it's going to have much to do with the rising oil prices right now, but I do think that we're overdue for a pullback. Everything is so overweighted towards tech right now, and I don't know what that catalyst is going to be, but we've seen the S&P and basically the markets trading sideways since around November. And we're waiting for a breakout now, whether we're going to break out of this and the markets keep propelling upwards out of that little price home right now, or is it going to start being pulled back? I think it's probably more towards being pulled back. So people should be taking a look at taking some of those chips off of the table, repositioning things that aren't going to be so affected by the overall markets right now, looking for yield right now more so than growth. So I would be really cautious right now of just having too much tied to that particular sector.
Yeah. Patrick, what else is on your radar as we do see this persistent choppiness in equities?
Yeah, the other things that are on the radar, longer term, you've got things reshoring, manufacturing back in the country. So longer term, I think that's a good move to place money. And also energy infrastructure. You've got all of these AI centers that are opening up all over the country. We need all these data centers. You need the power. There's such a huge demand for that right now. So we're looking a lot into that longer term. And then for shorter term, we're looking for yield. There's great places like JEPI that are out there that, you know, we can get an 8% yield and not have to deal with the ups and downs of the markets here in the near future.
Yeah. You know, it is interesting. Earnings are certainly quiet right now, but how might higher oil prices impact corporate results when we see the next batch of those start to come out?
As far as corporate prices go, I don't think it's going to have too much of an effect by that. I think it's going to have more of a consumer effect and the consumer reaction to the gas prices at the pumps. So when it comes to the service industry right now, that's really where the sticky inflation has really been with wages. I think that's going to have more of a corporate effect as far as the prices on wages and making that inflation sticky from that standpoint.
All right, Patrick Mueller, president of Bella Advisors. Patrick, thanks so much for joining.
Thank you very much.
All right, everyone, will stay with us because still to come, Silicon Valley Bank recently released a report, focused on global private market trends. Its head of Global Gateway, Andy Sau, is going to join me to break down those findings. Plus, True Religion made a splash when it debuted in 2002 with a $250 pair of jeans. But more than 2 decades later, it has a brand new strategy and price point. Its CEO Michael Buckley joined us recently to share more. And then, of course, I'm going to head down to the trading floor. You're taking a live look at the floor right now. I'm going to speak with MDA Space's CEO Mike Greenlee about his company's out-of-this-world IPO. Stay with us.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. Silicon Valley Bank recently released a report focused on global private market trends, and it covers everything from China's position in the AI race to global talent flow. Well, joining me now with more is Andy Sau. He's head of Global Gateway at Silicon Valley Bank. Andy, welcome.
Thank you, Kristen.
It's good to have you on the show here. Before we dive into this, what is the Global Gateway business at SVB?
Yeah, first let me start by thanking you, Kristen, and the New York Stock Exchange to have me on and talk about the report today. So the Global Gateway is really the group within the bank that manages all our international relationships with startups, scale-ups, and venture capital firms and key innovation hubs around the world. So you can think of us as the Center for International at Silicon Valley Bank.
Yeah. What is that engagement like when it comes to innovation?
Yeah, we, again, the key markets that we're covering range anywhere from, as you mentioned, China, obviously some incredible innovation in the second largest innovation economy, Europe, Israel, and then you have developing markets such as India and Latin America that are really coming along nicely as well.
Okay, so this report obviously indicates the importance of global talent flow. How so?
Yeah, I mean, there's some great data in the report that suggests that when you look at the unicorns, the top 100 most valuable tech companies in the US, that 59% of them have international founders as part of the initial founding team. Furthermore, when you look at market value for those 100 unicorns, all $1.9 trillion, that 77% of that valuation is again tied to foreign-born founders. So it really suggests that international founders are critical to the success of the U.S. innovation economy.
It is interesting here. Global founders, obviously capital has an impact as well. How so when it comes to capital?
Yeah, when you look at the funding coming into the U.S. to fund the innovation economy, about 20% of it comes from outside the U.S. When you break that down, you have sort of the usual suspects like Europe and Asia. But one region that pops up is the Middle East region. About 14-15% of funding is coming from the Middle East. Sovereign wealth funds are very active in terms of diversifying off of the energy economy and now making quite a difference in terms of the innovation economy.
What have you observed when it comes to cybersecurity and pockets where you're seeing a special focus on that?
Yeah, well, I think when you say cyber, you think immediately of Israel. And last year, our client Wiz, a leading cybersecurity company, was acquired for $32 billion by Google. And also last year, you had a company called CyberArk, another cyber company that was acquired for $25 billion. So the Wiz acquisition ends up being the largest single M&A in Israel, and that's a lot when you think of Israel as the startup nation. So I think it's safe to say that Israel is now the scale-up nation.
Yeah. And when it comes to AI, I think that your report specifically focused, you referenced earlier China, just what we're seeing come out of that region. What have you seen?
Yeah, I mean, I think with China, certainly when you look at where AI is happening, it's certainly centered here in the U.S. Being from the Bay Area, a lot happening in San Francisco, which is amazing. But you cannot count China out, again, as the second largest innovation economy. A year ago, they had what they called sort of the DeepSeek moment, and DeepSeek was a startup that was funded for about $6 million versus the $60 billion that OpenAI was raised. So on that $6 million, they were able to create an open source model that was nearly competitive with the latest ChatGPT models. So certainly suggests that China is very much still in the AI race, and that sometimes scarcity can be the mother of innovation. That seems to be happening in the Chinese market.
We just heard some cheering behind us, of course. That was the first trade bell for MDA space going public here on the New York Stock Exchange today. So certainly a lot to celebrate there. You know, we haven't focused much on the capital markets in India. What did the report find in that regard?
Yeah, I mean, it's remarkable to think that India, in our first engagements in India were, back in 2002 and 3. And so to see it today as the leading market for IPOs in 2025, really quite remarkable. And some of that is now translating to the tech and startup sphere. And so what's happening is that Indian startups and venture capitalists are traditionally built their businesses to come list here, hopefully on the New York Stock Exchange. And they are really strong at things like software as a service, so they come to the U.S. to commercialize. And now with the ability to list in India, that's beginning to change, where they're building companies to be able to potentially list there first and unlock some of that liquidity. And when ecosystems have that liquidity freed up, they're able to create a flywheel effect sort of allows them to accelerate even faster. So a lot to look for in India.
Andy Sowie is the head of Global Gateway at Silicon Valley Bank. Thank you so much for joining us, Andy.
Thank you, Kristen.
Great to have you. All right, well, True Religion made a splash when it launched in 2002 with a pair of $250 jeans. More than 2 decades later, the brand is taking a fresh approach with a new strategy and price point. And its CEO Michael Buckley spoke with our Ashley Masternardi at the ICR Consumer Conference in January. Let's take a listen.
True Religion is a global lifestyle and apparel and accessories brand. We started out as a jean company. Today we make a full collection of men's and women's apparel and accessories. Jeans is about 40% of our business. We sell t-shirts, hoodies, joggers, button-downs, dresses, shorts, skirts, hats, belts, wallets, bags, fragrance, footwear. It's a full range of apparel and accessories.
So for millennials like me who remember True Religion from the early aughts, the early 2000s, what evolution has the brand undergone since then, if any?
Well, when the brand first started and we positioned a brand, it was extremely, it was basically jeans, and it was over $250 jeans. And we went after I'll call it a high-income Nordstrom, Neiman, Saks type shopper, 250,000 household income. I ran it as a public company from 2006 to 2010. I came back to the business in 2019, and at that time, we repositioned the brand to go after a much larger audience. So my customer today is really, the core is kind of an 18 to 45-year-old customer, African American, Latino, white, Asian, all races, but about 65,000 household income. So a much wider audience, and there's around 110 million people in that addressable market that we're going after. So we're going after a much larger pie of business, and we're also at price points today. Years ago, we sold $250 jeans. Today, whether it's a t-shirt, a hoodie, a jogger, or a jean, we're in the $30 to $80 average unit retail range.
What does the name True Religion mean, and how does it relate to your brand ethos?
True Religion, when the founder of the business came up with True Religion, at the time it was a jean company, and he said the only thing that is common with every person in the world is they wear jeans. So the only true religion out there is that everyone believes in jeans.
And how do you differentiate yourself in the apparel space?
Obviously with the product itself. I mean, again, the brand means status, the horseshoe means status. But from a marketing perspective, we have a huge affiliation with the music scene, in particular with hip hop. And we get stars like Megan Thee Stallion or Anita or 2 Chainz or Chief Keef that have been like the face of the brand seasonally, for a number of years. That really keeps us relevant with this consumer today.
And if you're also targeting now consumers 18 to 45, have you had to change things at all to kind of attract the Gen Z consumer?
Absolutely. I mean, like our business today is heavily driven by e-commerce, by social media. So that's 40% of our business is truereligion.com, where we're able to communicate directly with this customer who pretty much lives on their iPhone. So they're able to see everything that we're doing and communicate with us through our social media platforms and whatnot.
And how has that strategy changed from from when you took the helmet in 2006?
When I came here in 2006, it was all about, at that time, it was all about opening our own retail stores. We used to say, we don't invest in marketing, we invest in retail stores, which are a 365-day-a-year billboard. Today, it's all about the digital footprint, it's all about the social media, it's all about telling the story digitally to this consumer.
All right, and what do you hope growth will look like in 2026 for True Religion?
We've been growing at double digits. I mean, we took the company from 150 million 4 years ago to next year, this year, we'll finish this year, which ends this month, around 450 to 460 million in revenue, and we expect double-digit growth again next year. And that's coming from all channels. So I have e-commerce, I have 55 of True Religion stores, and we're in 7,000 wholesale locations globally.
What excites you about this job? What gets you out of bed in the morning to do this?
I'm a growth guy. I mean, I've been involved in this space for over 30 years, and I love to grow things. I love a brand where the consumer has a passion for it. Like, our consumers love True Religion. That horseshoe, some people in this industry refer to us as the Ralph Lauren for the urban casual customer. That pony is like, our horseshoe is, means status the same way the pony does to Ralph Lauren.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live, everyone. We're down here on the trading floor of the New York Stock Exchange. MDA Space, you saw them on the opening bell podium. This company launched in 1969, the same year that Neil Armstrong first walked on the moon. Well, more than 5 decades later, the company is working on NASA's next moon mission and beyond, celebrating its IPO here at the NYSE, as you see on your screen now. Joining me now with more is Mike Greenlee. He's CEO of MDA Space. Mike, welcome.
Good morning. Thanks for having me.
Yeah, congratulations. It's great to have you here. And in your words, explain what MDA Space is doing to our viewers.
MDA Space is a pure-play space company, 57 years of experience, over 450 missions in space that we've successfully provided technology to. These days we work on Earth observation, communication satellites, and robotics and rovers for the Moon and Mars.
It's pretty impressive, and I do see that MDA Space earlier this year did receive a contract with the U.S. Missile Defense Agency. What role does that play in your strategy?
For us, we want to work on all aspects of the defense in space. The SHIELD program, which is the contract we got an IDIQ position on, will contribute technologies to be able to track and detect threats to North America and defeat them.
Well, we're happy to welcome you to the stock exchange today. What made you decide to list here on the NYSE?
We've been listed successfully on the Toronto Stock Exchange in Canada for the last 5 years and had some excellent growth there. We want to open up the company to more investors. Investors with deeper capital, investors with a deeper understanding of space. There's a lot more space companies here in the United States, so a lot of our comparable companies are here, and we want to get into the mix with all of those in the investment pool.
Okay, so it's interesting. As I mentioned earlier, MDA Space is providing robotics for the NASA Artemis mission, which will eventually bring humanity back to the moon. What's your role in that?
We provide space robotics right now to Artemis, so we're building the robotic systems for the space station that will orbit the moon, adapting those robotic systems for the lunar surface. We also have a program out of our MDA UK office as part of our European team to bring the communication networks to the moon so that astronauts will be able to communicate while they're there.
How are you going to use this new capital?
We're going to be using it to be able to shore up our balance sheet. We have ambitions to do acquisitions in the United States and in Europe over the next period of time. So this puts us in a stronger position. It also gives us currency. In addition to the capital, our stock here in the U.S. gives us currency to do acquisitions using cash or stock now within this community.
Yeah. Is there anything on your radar when it comes to potential acquisitions?
Not a specific target. We have short lists for sure. Our corporate development team is very strong. They're tracking short lists of targets in the United States and in Europe. And so as they become available or as we encourage them to become available, we'll take action at an appropriate time.
Okay, so potential acquisitions on the horizon. What else is next for MDA Space?
Continued growth. We have a $40 billion pipeline of specific opportunities that we're pursuing that have order potential over the next 5 years. We've been growing at a 32% CAGR the last 5 years, and we'll be digging into this pipeline to continue to enhance our order book on top of our existing $4 billion backlog of signed contracts, continue to expand that as we become more international, expanding globally.
Yeah, it's quite impressive. Why is now the time that you wanted to tap the capital markets?
Space continues to expand. Our company has gone through some excellent growth. We've quadrupled in size and profitability in the last 5 years. It's time for us to go on to that next level of growth. With all the growth that we're having right now, acquisition makes the most sense. And so accessing the capital markets and shoring up our balance sheet, getting stock as a currency puts us in a strong position now to get out there and acquire.
Anything else our viewers should know about MDA Space?
Just that we are a very strong performing space company. Space is a growth sector. The space market continues to expand. It's about $600 billion globally right now, moving to 1.82 trillion over the next 8, 9, or 10 years. We've been around for 57 years, but we are, as a result, a very strong performing company. We have excellent growth, 20% profitability, lots of cash, a strong balance sheet. A lot of space companies are just starting. We're established and ready to grow on that very strong foundation.
Did it feel good to ring the bell at the NYSE today?
It was excellent. It was excellent for me. It was excellent for our team and our company to be able to recognize this next critical milestone in our evolution.
Yeah, I want to finish by asking about your team because a lot goes into a public market debut, especially here in the United States. What did it take to get here?
Just a lot of good hard work. We have an excellent story. It starts with all the performance of all of our employees, delivering our programs, delivering profitable growth year over year over year to give us that great reputation, building that pipeline that's at $40 billion now. And then, of course, there's a tactical work of getting on the exchange where finance and legal and communications do all of their work to put together all the necessary information and do all the investor engagement to get us to today.
Mike Greenlee, congratulations again. We appreciate you joining us here on NYSE Live.
Thanks for having me. It's a great day.
All right, everyone, you were just hearing there from Mike Greenlee, of course, with MDA Space. You heard its first trade bell a little bit earlier on in the show after that 9:30 a.m. market open bell. Our thanks again to Mike. And let's take a quick look at the S&P 500 to see how we're trading today. We're just about 30 minutes into the start of trade before we round out this particular show. I'll take a look up here. The S&P 500 is down by about 1.2%. Under pressure as oil prices continue to rise. ICE Brent crude oil earlier hovering around $100 a barrel as the conflict in the Middle East continues. However, our markets guests have told us that this economy and that really actually, in fact, the stock market has remained resilient throughout all of this. The S&P 500 just about 5% from its record high, so hanging in there despite some of the disruptions that we've seen of late. We've got a lot going on here at the stock exchange today. You do want to stay with us throughout the session, including on our social channels where you're probably watching this show. If you're not watching on the NYSE TV app or on Cheddar, that's because Olympians, two-time Olympic gold medalists Madison Chalk and Evan Bates are going to join us a little bit later down here on the trading floor for another first trade bell. I'm going to be speaking to them for an interview, and you can catch that, of course, on our platforms and program here in the days and weeks to come. We're live on all the streaming services that you see on your screen each weekday morning for this show at 9 a.m. Eastern until 10 a.m. Eastern, covering the opening bell and everything in between. Thanks for watching. As always, we'll see you back here tomorrow morning.
Welcome to the public market.
The New York Stock Exchange is the cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?